What's going on, everybody? Welcome to the stream. If you can notice in the background, things are a little bit different. I am in transition right now. I am working on moving from one place to another, but I decided to catch up with you guys because, man, what a week this has actually been. They say, or rather, what is it? Old Jim Cramer said to sell in May and go away or leave the building, but man, he is just such an inverse indicator. Let me do some checks here to make sure that I'm coming through. I'm streaming live on Discord and TradingView. What's up, guys? And on YouTube's. So if you have any questions or symbols or things to look at, post them in one of the chats. I've only got two monitors. I know that's really hard for a trader to work with, but I'm going to manage today with just two. So got my chat on one, I got my screen on the other. We got a lot of stuff to look at. I have not been actively trading this week, but I've been watching my positions, and some of the trades that I put on, up to this point, year to date, have been doing very well. And sometimes, like times like this, where the intraday price action is just very, very choppy. It's just fine to just sit and wait. I think Jesse Livermore, one of the most famous traders 100 years ago, said that he made his money not by doing, but by sitting tight and just letting the profits run, especially when things are a little bit slow. But we're, of course, going to do a market update. I've already got some questions on Discord. By the way, there's links down below if you want to join that community. Don't charge anything for it. I just like having ideas to share with people, and people share with me. So let's do a community together. All right. Big Booge. I'm not. I'm self-taught, but I did have a mentor back a decade ago who taught me about Ichimoku. And Ichimoku, which I've got Bitcoin up right now. What Ichimoku is based on is lots of 50% retracement levels. If we just take off, the Ichimoku from the chart here, you can see that from the low, the March 23 low on Bitcoin, up to the high of April. If you remember, this March low was based upon all the banking crisis FUD. FUD stands for fear, uncertainty, and doubt. And then right up here at the high, that was when that gentleman on Twitter was talking about how Bitcoin was going to be $1 million in 2 or 3 months. And well, that was that final leg to push people to buy it, FOMO in. And oh man, I look at a chart like this, and I remember this little leg right here was that guy making that tweet, that bet that Bitcoin was going to go to $1 million from 30K to $1 million in a very short amount of time. And a lot of people were sharing that to me, and I know a lot of people were buying based on that. And well, they're just sitting and waiting on it to bleed out. And have been looking for a retracement to that 50% level of 25K on Bitcoin. I think someone in the Discord actually asked me to look at this, so that's why we're hitting it off the top. But like I said, when I learned Ichimoku years ago, one of the key fundamental components was looking at the price relative to the Ichimoku cloud. And as you can see, that cloud sets up the bottom right here. That cloud is containing, or has been containing, Bitcoin on the daily for many weeks now. The problem for Bitcoin bulls is starting to begin, and that is because price is starting to get below the cloud on the bearish side, and there's one more shoe that has to drop. It's that momentum, Chicago, the lagging span, as it is called in TradingView. When that gets on the other side, that's not going to be good, because that is going to signal a full trend change. It has worked time and time again throughout the decade history of Bitcoin. If you go back through my postings from earlier in this year, the time to buy Bitcoin was when Bitcoin was coming on the bullish side of the cloud. Remember the FTX debacle? Well, that tanked it down to about the 17K range, which was about a 75% retracement from the all-time high. That's only about the fifth time in a Bitcoin's life it's ever done that. It's not like it's unheard of, but that 75% retracement, everyone was very afraid. All the Bitcoin chats went silent. But then when price got out around 18K, right when momentum was getting on the bullish side of the cloud, that was the time to buy. Were people buying it, scooping it up, posting about it on Twitter? No, because that's not how market psychology works. People buy it when things are going really nice and up. Well, and there was a second time to buy. Remember my favorite metric that I talk about that I learned from Ichimoku, which was the 50% retracement level? Well, if you drew a 50% from the lows and we look for it to come around to make a high, it's going to pull back right there again. So key, so key, so key. That 50% retracement level matching with Ichimoku, it almost got on the bearish side of the cloud, but it did not, and momentum did not get out. It contained it, held it, and that was the last good time to buy. So it was either back in January when it first came out of the cloud on the bullish side, when it pulled back to the 50%, about 20K, back in March on that banking FUD. A lot of people have been saying that Bitcoin is going up because of the banking concerns. Well, maybe it's going up because people are buying it, but when there was a major economic shock in the risk markets, Bitcoin responded bearishly. And so all this talk about, the economy going to crash, the US dollar going to fail, thus Bitcoin is going to do well, it might in the long term, but if we get a really major calamity in the stock market or in any of the risk markets, Bitcoin will be affected too. But what I've been warning people about throughout this entire year, basically since November of 21, is we're going into, and we're in a crypto winter, a bear market cycle, and these can last a long time. This run we're having right here, I feel like I say this on every single live stream. This reminds me a lot of the 2019 run, where basically December of 2018, after the past all-time high parabolic, go up, and then, well, we had COVID, which brought it back down. So it wasn't really a fake pump, but it wasn't a run for the all-time high. So that's what I'm continuing to look for in Bitcoin. I want to see a pullback and to see what happens at this 25K level. But until that actually happens, I'm not particularly interested. So the pullbacks that I'm looking for, where I'd be interested in buying Bitcoin, would either be from the full retracement, either the 23K or this recent retracement right here. All right. If and when we break that 30K high, we'll talk about resistances, but that's going to be a major issue too, that high. So be watching for that. Again, if you have any questions, post it in the chat. Let me catch up. Let me catch up to some of these things too. All right, so Big Booj, you had some questions. You want to post them in the chat real quick? Earlier, before we got into the discussion, I think I am GIG was talking about Amazon. Let's go through some of these trades. These are some of the trades that I put on this year. And like I said, I've been busy this week. Haven't taken any day trades, but I've just been sitting and watching these positions go. Amazon, come on. This company is not going away. And I don't know how much more clearly I can put it for people, but when you have the all-time low back in 2001, 22 years ago, and then you have an all-time high in 2021, 20 years later, it set up a 50% retracement level at 94.20. We hit it at the end of last year, the last quarter of 2022, and it has been dancing around it for the better part of the first quarter. Now it's finally begun to rise off of that, but that is the point to buy. It's a 20-year level. So it's a generational opportunity here on Amazon. I mean, they're not going to go away. I mean, this is going to be the point we're going to look at years down the line. It's like, oh, wow, look, another 50% that it held, except this one was based on a 20-year level. So, yeah, now as far as getting into Amazon now, especially in options, I'm looking on my right hand side here. I mean, all these positions that these bullish positions have been doing very well this week. That's not really going to be the time to buy. You really need to be buying stocks back when the debt ceiling issue was still an unknown. Look, I don't know if you're new to following the news, following politics, but they do this every couple of years. And the financial media loves to blabber about it, how it's the reason the stock market is down that day. It's not. The market already knows what everyone knows, that they're going to raise the debt ceiling. The U.S. is going to go further into debt. It's not an unknown variable. So the stock market is rising because, you know what? We're actually probably in a bullish market. I know that's not what you probably hear when you read the financial media. But let me show you something in just a second. Then we'll get to some more questions. I put this in the notes because let me see if I can give credit where it's due. One of my Discord members, Huna, sent this to me, and it's because I have been admittedly remiss to not. I haven't been keeping up with my sector rotation. Where's that combination? There we go. But sector rotation is a theory, a stock market theory that basically says when certain sectors are leading, that will tell you at what point of the market you're in. So let's do a quick look at the last year and what sectors are really leading year to date. That's 21. Let's go with this. Let's go to January. Can I type it in? 2023. Oh. Sounds like somebody's got a... Hey, what's up, Manaconda? I can hear you.
What's going on?
Hey. I'd like to hear what you think, but let me make my point real quick here. So right now, year to date, the sectors that have been leading us off of a bottom, that's what it was, basically last year in October, is IT, information technology, tech, that's no surprise, communication services, staples, and industrials. But really the headline there is tech and communication services. And so if we do a quick look at sector rotation and we look at our handy dandy little chart right here, when technology and communication services, what was it, discretionary? Staples, discretionary. Where's discretionary here? Okay. It's no wonder to look that we're in this upswing of the stock market. Basically, tech and communication services, the risk on is leading us into what is essentially a bull market. And so it's no surprise to me that with all the FUD, with all the uncertainty, with all the concern that the world was going to end, that I've read every single day of every single year of my trading career, that we instead are actually going up. And yeah, big levels we'll talk about here in a second, but you got something to add to that, Ant?
It's bullish.
Yes. It's pretty
It has
succinct.
been bullish. It's just, I mean, I don't know. I only pop in on occasion, but every time I get in here, I'm like, yeah, it's bullish. Everybody's like, I'm not sure. I think now I look for a pullback soon because everybody's getting bullish again, but it is bullish. And if we do pull back, you're looking for another higher low, right? I mean, just if you look at the NQES from the daily, it's higher low, higher low, higher high, higher low.
Yep.
That's bull market stuff. So
The level that I've been watching, again, 50% retracements, they just freaking work. From the COVID low all the way to the all-time high. Back in October, we hit the 50% retracement on, we're looking at the ES right now, which is the SP 500 futures. I use this on a regular basis because it trades 24 hours a day. Well, 22. And we're plugged it there about 3,500, let's call it, or basically SPY 350. I think is probably what it was. SPY 350. Do a little history lesson here. Yep. And so, bing, hit it. That was the support, that October CPI print. And then what we've been watching all through this year is the 50% retracement on the pullback. And so for many weeks, coming up to this first January push we had this year, came up, held it, did a pullback in here, came up and has been fighting it, and now finally it looks to be running away. And so this level, the 41.55 level that I've been watching and trading for months now, we're finally starting to get away from it. And NASDAQ has definitely let it past its own 50%. Let me redraw that. It's been a couple of weeks, but that was definitely the first sign. It got, ooh, look at that. So broke it in the middle of May, pulled back to it basically the week before. We had Memorial Day, the 24th on Wednesday last week. Pull back to hold it, and it has just not looked back since. That you really need to. That's a really good little setup right there.
We long that one in futures.
Nice.
That actual hit right there, as you just circled.
That's a good hit. That's a really good hit.
Sold it a little early. Maybe sold it a little early.
But yeah, you're always going to feel that way, aren't you? Because you got rid of some Tesla today, didn't you?
I did sell some Tesla today, and it did also close 10 cents over the 50% retracement.
Oh, did yeah? There's that 21 213.38. So
I got 82, but yeah.
For those catching it here, I've been talking about this week after week, but a little quick recap. Tesla, we had a whole years of history, but the key succinct thing here was this move down that we had from September 22. It came up to a 50% resistance back in February. That was when all that AI talk was all the rage, and that was short. Didn't make as much money as I wanted to off of it, but that's fine. A lot of people were trying to buy in because they were FOMOing it at that point. I tried to get people to wait, and the key point to wait that I definitely did my duty to tell everyone about was waiting for again, nothing magical. Well, it is magical somewhat. 160 on the pullback, 159, but let's call it 160. And that was the point this year where you should have bought Tesla. Hashtag this is not financial advice, but seriously, I mean, don't buy it when something is going ripping like that. Let me segue real quick back to Amazon for someone that was saying earlier, IMGIG, you were looking to buy some calls on Amazon, and what I'd like for you to do is resist that urge to jump in, especially if you're going to be doing options because you needed to go. We've gone on so long. Wait for a pullback from this recent trend. Try to get like a 105, 103 pullback. You're gonna have to be patient, just like in this Tesla, where the Tesla pullback all the way to 160 took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It took me 3 months. I had to wait 3 months to find the opportunity that I wanted on Tesla. I had people coming in Discord every day. Our good pal Nuggles asking, when do I buy Tesla? When do I buy Tesla? I was like, just peace be upon you. And then, boom, that's where opportunity is. And there's a lot of these 50% pullbacks. Let me knock them out real quick. So Caterpillar is one that, again, we've been having to wait patiently. 213 has been hanging out there basically all year. What's up?
Caterpillar, go ahead.
Caterpillar, yeah. Pulled back. It hit it back in March, and I've been waiting and basically holding on to it there. Let's see. This one is a little more long-term. EMN is a materials company. Haven't been really pleased with that because it's been hanging out. But the Met, which I believe 2 weeks ago we talked about it. I know I put in the live stream notes, but that pullback has been hanging out these couple of weeks. Again, a 50% level at 50. There you go. And that's a good pullback there.
What a great
Um,
ticker.
what Met? You like it?
Yeah, I like it.
Yeah. Are you biased towards it from personal experience?
No.
Oh, okay. Home Depot is another one, another recent one where 280 is that pullback level that has been dancing around. I like it. Grabbed it. I think this is the weekly. Yeah. So I had to go back and look and see where and when I posted it. Oh, it was on earnings. Yeah, that's right. So it was on earnings a couple of weeks ago. And what really, I'm a contrarian at heart. Okay. So when I logged in and I looked at Zero Hedge, I saw where they reported that Home Depot plunges worst revenue. I mean, you start saying these things to me in the financial media, and I want to go long. And so, yeah, that was earnings there. Came back and tested it again, but so far is holding it. I love that kind of stuff. I love it when they make people think one thing and it's going the other. Truest,
They they got me on cat. I had an alert set at 204, and the low just the end of April was 204.04, and never
right.
hit me.
Well,
It
I've been
got
in
me.
it for a while, and I did not get stopped out because 202 was what I gave it because I'm trying to play it up here. But yeah,
Yeah.
I mean,
They really ripped today.
who knows? I got to be objective. I got to say that these things could turn around, but I mean, so far, I mean, I'm looking at the chat right now. We got a really good turnout. Looks like a bull market to me.
Bull market's back.
Bull market is back. Yeah. All right. Got anything else to add? I'm going to start looking at people's comments.
Yeah, you go for the comments.
Okay. All right. So let's see. Let me go through the Discord here. Again, if you
Oh,
guys
it's
got
got
some to,
Target's a good one too.
huh?
No, it's 50%.
Oh,
Target's
Target.
another one of those examples of it's going to go into the gutters even more.
Ooh.
That's when you flip
Okay.
out the buy.
Yeah. All right. So let's talk about this. So I think someone asked me earlier. Um, Common question that I get asked on either the stream or on Discord or on TradingView. Like, where do you think this thing's going to finally turn around? Where's this thing going to go? Wow, this is actually a really good example. We need to talk about Target. So, I am not going to make any note about the politics of it because I am on a self-imposed political hiatus. Namaste. I'm going to remove myself from political stuff, at least until 2024. I'll get plenty of them. But this chart pattern right here, what you need to study to understand what's going to happen to Target. There's plenty of examples of that. We just looked at one earlier, Tesla. Let me clean this up. So with Tesla, there was a key level that it hit back in June of 22. And that was a good level to buy it. It's a 50% retracement. That's the support that you want to look at. I don't use any fancy moving averages or anything like that. I just look for supports. But when that support is broken, as it was here, that's when you enter what I call, this is my word for it, the valley of risk. Now, what the valley of risk means to me is it has broken a support and it's falling into a valley and you don't know where this is. Imagine there's a fog in this valley and you do not see the bottom of it. You don't know where this thing's going to stop. It could go to the next support. It could go to a low here. It could go all the way back to the IPO price. You don't know. And the problem that a lot of people get in trouble with is they keep hoping for it to come back and it just keeps going down and down and down. One of the things that now Tesla finally stopped at 108, but Zillow is I've still got it marked up because I many times I have come through here on this this live stream to teach. That's what I do this for. I like to teach people risk management when it comes to these sort of plays. So, and this is one that I was actually in. I liked Zillow as a company. I use it for my rentals. They had this crazy idea that they were going to start buying up properties. In hindsight, that looked like a bad idea to try to commoditize real estate. I went to some of these properties. I looked at some of them, and some of the ones they bought around 2021. And if you looked at it from the curb, it looked like a normal house. But once you got inside and you actually looked at, the tile, the little things. Like I remember I went to one that was owned by Open Door, and someone had tried to do the tile in the kitchen themselves. They never even put any grout in. It was just tile stuck against the wall. Little things like that they just bought sight unseen, thinking that this would all work out. But anyway, I digress. The price action on Zillow was the key. I got into this on the 50% retracement level, which is about 114. And this was back in 21, when things were starting to do a pullback. I didn't see any of this stuff in the future, but once it finally broke that level, those lows, then I was out. I got out because you don't know what's going to happen in the future. We'll walk through this here, this little telling example, and then we'll go back to target. So it's really important that you pay attention when you have a major level of a trend, and it's broken. When it starts to stop out, break these lows, you need to be out of this stock. Now, a lot of people will say, well, I like the company. It's going to come back. It's only at 90. How much lower can it go? How many times have people asked that? Well, the answer to that question...
Don't fool yourself into thinking that you're going to be able to predict the macro.
Yeah.
In the world, like it's nobody is smart enough to do that.
Too many variables, and too many things can happen. Market can remain more irrational longer than you can remain solvent. All that kind of jazz. But Zillow is just such a key example of why you have to cut, because what happened was on this date, November 3rd, 2021, they announced their multi-billion-dollar write-down of their real estate portfolio. Now, there was no way that you could have predicted they were going to say that unless you were doing insider trading. And on that open, you lost 20%, well, 16%, and it still never looked back. You never got a reprieve in this whole time. Again, what you should have done was when it broke that level, you get out, reassess, ask yourself, this money that I have in this instrument, I'm really attached to it, but could I make more in something else? I know I'm married to this, but the answer to the question that people were asking at $90 Zillow, how much lower can it go? Well, it got down in the 30s, so you lost almost 2/3 of your value. Where it's at, I don't know, but you're probably still down 50%. Yeah, you're at 45. When you would have asked the question, how much lower can it go? The answer is it can get cut in half. I remember that was the kind of the case that people were asking about Bitcoin all through 2021 when it was around 35, 40K. Well, how much lower can it go? 17. So let's jump back to Target. Target. It had a major level, which you can see it's been dancing around for the better part of a year, since May of 22, around 158. And now I don't know what's going on. I don't care what's going on, but it has broken, in my estimation, cutting through all the noise, cutting through all the BS. It has solidly broken below this 137 level. It has broken below this range that it has been caught in, and that is not good. And so now it's most likely just going to be in free fall. Hashtag this is not financial advice, but
I'll let you know how it works out because I'm long from 128.
Oh, you're trying to buy it from here? Well,
I bought it. Okay. I bought it.
All right.
So Norak and I do not trade the same way at all. Although I've learned a lot from Norak, and I love the 50%. But for me, this is the same reason that I bought Tesla.
Mm-hmm.
But it's definitely not financial advice. My risk tolerance and risk appetite is unusual, but it's this out from 2020 where it dropped the beginning of 2020 and then where it recovered and broke back out post-COVID. So you can kind of see it there on the far left of the screen.
Yeah.
I think.
By your risk tolerance, you basically, no freaks are given, essentially.
Yeah, I'm not afraid. I don't care if it's wrong, right? But and then there's another kind of setup that I look for on the 4-hour chart with RSI that kind of showed me that I thought that the selling was slowing down as it came down into 126s, 127s, and then we got a spike. I think it probably threw a spike in their indicator actually yesterday, 127, and that's where we entered that yesterday. So we had some people
Well,
that took.
it's definitely oversold. And okay, so
So now it's easy. Now I've taken profit, and now my stop's just at 128. So I can't
yeah,
lose. But it was a very defined $1 risk against that local low, right?
yeah. So you're trying to what you like to do is bottom pick. You like to try to take little stabs at it, little short stops.
Yeah,
Mm-hmm.
I'm not looking for necessarily the big ride, although I'll take it.
Yeah.
I'm willing to
Well,
be wrong a couple times.
I was going back and looking at the Tesla, um, and the thing I definitely liked about it, and this is back when you got it at 107. You have low, low, and then you have this little low right here that immediately shoots back up.
Uh-huh.
Mm-hmm.
And if you look at I don't know if you've got RSI pulled up, but if you look at the 4 hour then on RSI, you can kind of see this divergence where there's these like stop runs almost, they look like.
Yeah.
And they always look like stop runs until they're not stop runs anymore,
Mm-hmm.
right? But you can kind of see you're making lower lows, but RSI is drilling back up.
Yeah.
And that to me is, I don't buy on based on that, but if I have other reasons, that was the reason for that entry at 108 on Tesla.
Yeah. See, I
Same
see what
kind
you say where you have the RSI is going up even though it's making lower lows. Definitely a divergence. That's definitely the word
of,
for it. Yeah.
you can see it on Met too. It's like here there be buyers, kind of is what this makes me think. And if there's not, real quick where you're wrong, really close by.
Mm-hmm. Yeah. Indeed. All right. Let's go back through the list. Okay. So I'm going back to pre live stream. You have an energy play on the radar, PFB. All right, let's see. What is PFB, and is it looks like Canadian stock?
I couldn't get the pull up on the U.S. ticker. Yeah, it might be
Yeah,
Canadian.
see if you can give me a US ticker. There one's going to come up on TradingView. Let's see. PBF. Okay. PBF. Sorry. PBF. PBF Energy. All right, that sounds like it. All right. Let's see here. What is your play here? Because I would like to see this pull back a little more to probably 26. That'll be mine thing. So, yeah. Big Booge. We'll continue that discussion. All right. Pound, dollar. Pound's looking pretty strong. Pound's been actually doing better than euro because the level for euro dollar has been 109. Again, it's that 50% retracement level from the high back in July of 22 down to the low of October. And I'll just go ahead and segue this into the dollar discussion. Everyone's been talking about BRICS and countries getting off the dollar standard, it not being reserve currency. But from the price action, the key level for the dollar index is 102. And while it's been dancing around it here for the better part of the year, it's still holding that level. The dollar is still maintaining its value in a pullback. So it had this big giant run. Why? A little bit of forex education for you. When banks increase their interest rate, that increases the value of their currency, especially when other currencies, as the rest of the world was, were keeping theirs deflated. The United States was the first to start raising interest rates, and that's why the dollar benefited from it across comparative currencies. The dollar yen, this is the weak. The yen would be of the major pairs. The yen, the Japanese yen, is the weakest because its pullback, it hasn't even tried to violate the 127 level. The euro dollar, the level is 109, and it's holding it. Most of the DXY is going to be made up of euro dollar, and so it's going to look very similar, though inverted, because it's euro divided by dollar. And then we go to pound dollar. You can see that it's got a little bit of secular bullishness in that its level, which was 1.23, it has actually gotten above it and it's holding above it. So, as far as what I know for the next week, I think it's bullish. I mean, that's just my opinion because that's what it's the longer term the weekly chart seems to be. Pound bullishness, I think, is going to be the theme for the next few weeks. I've been telling people to be paying attention to forex because now that countries have different interest rates, you can actually get some trends developing there. And specifically, you wanted to look at the pound yen, which that's a good thing to look at because pound being the strongest, yen being the weak. Well, there you go. That's pretty bullish right there. There's definitely a trend going on in the pound yen because just without even looking at this cross pair, we could see relative to the dollar that the pound is increasing in value because I believe they have increased their interest rates a little bit quicker. And the yen, Bank of Japan, they want their currency to be worthless, basically, have for 30, 40 years. So yeah, I think if you're long pound yen, or you're in good shape. That's trending. I of course would like to see a pullback of some sort, but yeah, that's going up. All right, let's catch up to the list here. Got that PBF. Open Door is still doing it. Yeah. Oh, Kroger. Can't have a live stream without
Oh
Kroger.
my god.
I mean, the most volatile grocery store that I've ever seen. I'm still, I'm still long Kroger from where is it? Is it is it
You're
2020 or
welcome for it.
21?
I think there was two entries on Kroger. There was the pullback to 42 recently, and there was one
Yeah.
back in 22. I think we took two, like a little bit lower.
So it is yeah, it's been holding out here. I mean, it pays a dividend. I'm happy with it. All right.
I don't know,
Let's
man. It's not going to a dollar like PLTR, but
yeah.
it doesn't. It's not doing it for me, Jim. I'm not feeling it. I need to
Boeing.
feel something.
Boeing, I don't see it. I see a historical short basically back in 21, March of 21, which is very similar. Basically, you had this whole COVID crash pull back up to a resistance 50%. That's a textbook example. Looks a lot like the cruise line 50% pullback that happened. These aren't going to make us money now because they're in hindsight, but these are textbook examples of how and when, 50% really works. NCLH, by the way, is something that I'm in now. Talking my book, basically, let's bring up RSI on this. I wonder if we have that kind of divergence. It's kind of like an opposite divergence. Let me see. I got into this because I have a friend that's really big on cruise lines. Sort of like oftentimes I'll do a solidarity play, but I saw it making higher lows. Very depressed. I have to dig into this a little bit more, but basically, 1515 was my target, and we hit it this week finally. Got the alert. That was one. I think this was on March the 23rd. The reason I came and looked at this, did I have a spike? Yeah, I had a spike. There was a false breakout on Friday, or was it Monday? I think it was Monday, March the 20th, and that made me come and look at it and take a little bit longer term play. But yeah, NCLH is going up. Yeah, I mean, a lot of this week, last few weeks, has just been watching things appreciate. All right, let's take a look at YouTube chat. KV looked at DXY for you. Let's look at Litecoin. I haven't looked at Litecoin in a while, but everything's going to be related to Bitcoin. You might see some secular trends, but it's in a crypto winter, and rising tide is needed to lift those boats. I think Litecoin has been doing a nice little steady appreciation here. I don't really have an opinion on it though. The question I'm looking for now in the crypto space is, what does this coin do for business? In other words, what is the use case? What is it going to let a company produce stuff faster, more efficiently? Is it going to save a company money? I mean, that's what made the internet blow up. The reason we're talking about Amazon is because we don't have to drive to the store to buy stuff now. We just order it. It's kind of in hindsight like, well, obvious, like why would we want to do that? But many years ago, the infrastructure was not there, the idea was not there. So Amazon back in the day, we talked about this at the beginning of the stream. It had its crazy time, the .com bubble, and then from the high of the bubble all the way down to the low was a 95% devaluation. And if you bought it at the high, if you bought it at the low, 20 years later, you'd be in good shape, but it wasn't readily apparent at the time. And that is going to be analogous to the crypto sphere, where 90 something percent of these cryptocurrencies are going to go nowhere. I hope that your favorite, is one that succeeds. But if you're trying to figure out what is going to make it, you need to look at what does this coin do? Does it make a business more efficient? Does it fill some kind of a use case? And so far, I haven't really seen anything compelling. NFTs, okay, that's something. Bitcoin, because it's scarce, okay. Monero, because it is anonymous. Ethereum, because it has its smart contracts. I mean, these are all good cases, but you're not going to get a reprieve from this bear market soon. It's going to take some time for this to flush out. People have got to get their emotions out of their heads. They've got to forget about how much money they've lost. So there's nothing I'm going to say about what the price action is going to do that's going to make it go up.
It's just a lot better. It seems to be more clear places to put money right now. I'm not a crypto guy, so I'm the wrong person to have an opinion. But
no,
stock market's been more clear than crypto's been to me recently.
So, but you hit on something that I think is very important, and I've had many discussions with crypto bros about this, and they disagree with what I've said about it. But essentially, this is the federal funds rate. This is what we all talk about when the Fed does its interest rate decisions. And Bitcoin was created in 2009, and then essentially Bitcoin has lived its entire life. Cryptocurrency has lived its entire life in a 0% interest rate world, with the exception of where the Fed tried to get it up, from here to here. But you can go and put your money in Truist Financial Corporation, TFC, get you were able to below 30, get a 7% dividend yield. You can get a 4% yield in a savings account. I haven't seen that since 2008, basically. The risk-free rate, in other words, where people can put their money and not take any risk, is not zero anymore. And it made more sense to put money in high-risk things such as cryptocurrency throughout this era. But things have changed. Now money costs something. It has an opportunity cost to it. And by and large, the big run that we had in this recent crypto cycle was due to money printer going burr. Money printer going burr, feeding back on people having lots of stimmy checks and lots of
liquidity.
Exactly. And that really gave it a lot of money. Now the question is, where did all that money go? Like, did it go to development of Bitcoin? Well, not really. The software programmers aren't really getting anything new. Did it go to development of Litecoin? Did it go to the development of Ethereum? Did it increase the use case? No. The price, the valuation of cryptocurrency is driven right now, has been and is, by one thing alone: inflows. So ask yourself this: are you buying crypto? Are you putting money into it? Well, if you're not, then how do you expect it to go up? Do you expect someone else to buy it? And that's always kind of been my beef with the narratives about, mainstream adoption and, old Michael Saylor going on and telling people to mortgage their house and mortgage their business. They're just trying to get the value pumped up in fiat relative terms to pump the bags of the people that bought in early. that doesn't generate wealth. That doesn't generate productivity. It's not how money's made. So that's my criticism of crypto right now. I'm looking at
You gotta
levels.
you gotta trade it till it's breaking out or something like that, or it gets a
Hmm.
really good pullback.
Yeah,
Right
you
now, it's a
right now
tradable
it's
thing, a holdable thing.
right now you trade it. Right now you trade it. Yeah. All right. Let's move along. Pfizer.
Just throwback.
Yeah.
Haven't owned that in a minute.
Oh, let me undo that. I was talking about having a dividend yield back in 2020.
Oh
I
yeah,
guess I guess I did a video about this or did a dividend yield thing. That was not. Well, yeah, it would have been nice to get it back in 2020. Um, but yeah, man, pharmaceuticals not really doing that well, huh?
unless you're LLY.
Do what?
Unless you're LLY.
Indeed.
Oh, curing Alzheimer's or something.
I hope so. My memory's getting pretty bad.
Yeah. There's a couple good ones. NVS. Sorry, I know we're getting off of Pfizer, but NVS is looking pretty good.
EMD. Well, I mean that's fine. I mean, if someone says Pfizer and it's not doing anything, I mean it could be an opportunity, but I think it's worth noting that there are bull markets out there. What was the other symbol?
Uh, NVS, Novartis. I do like Pfizer. It's not like a bad area to buy it if you really wanted to own it, in my opinion. In like this $36 to $37 range, if you can get it. It's just one of those. You just got to be willing to cut it if it goes lower, right? Unless you really want to own it. But if you're going to put your money, if you're
Yeah.
not looking for a dividend, and you want to trade it. There's better places to take a trade where you're going to get movement, in my opinion.
Where is the?
I don't hate where it is if you wanted to trade it against the low, but it's just I don't know if that's where the money is going currently.
So PFE 4.31. It's not bad. Man,
Yeah.
it's so crazy to look at these back when it was 0%, 1%, 2 years ago,
Yeah. Yep.
Mm-hmm.
It's the valuate or the pricing has changed a lot.
Mm-hmm. All right.
It was
On
2%, now it's doubled. That's because the prices have.
Tomo Sahad. What is this?
Tomo.
I don't know what this is.
Is that a cryptocurrency?
No, is it? Are you talking? Is it cryptocurrency? Or are you talking about this Tomo right here?
Tomo therapy?
I mean, if I'm going to do it from a technical analyst perspective, 166, pretty good level there. All right, Elliot. Hey, Roll. Elliot. Sure, we are in recession, and it's only going to get worse. Has anyone seen the mortgage market? I have. Prices have started going up. I don't know what it all means. I don't know how normal people are going to get a house with interest rates. I don't have an answer to those questions. But maybe we're in a recession, but the jobs number came out today, and man, like it blew past people's expectation. Everywhere I go, there's hiring signs. People can't find enough people to work, and what's that? Why? Because wages need to go up, essentially. I will say another little kind of anecdote. Every single police department is looking for people to work for them. Feel bad for them. That's it's not an enviable career quite as much anymore. But the point is, to have a recession, you have to have widespread unemployment. And while we may have high interest rates, we may have some negative growth, earnings may not be doing too well, we still have a very, very robust employment market. And so that full definition, because we are just talking semantics here, we're not in a recession because of employment. Do you remember, hey, Aroma, do you remember the good old days and, his Discord, Ms. Joe's morning discussions during COVID, best stock discussions? Yeah, he brought a lot of energy to trading. And I hope he's doing well. I hope he kept some of that. Actually, he did. He took that Tesla money, and he bought his wife a really nice couch. So he made it real. What do you think about Dollar General? Let's take a look. Oh,
I think while you're pulling that up, the recession thing in general, I mean, you just no, even the professionals, economists, like nobody's smart enough to know like what this is going to do to price and to win. So for you and me and anybody in here, no offense to anybody's intelligence, but I'm definitely not smart enough to figure that shit out. You don't know when it's going to downturn. Just play what's in front of you,
Yeah,
and
and
don't worry about that. Don't go past that.
what I really try to relate to people is how I've been reading about the end of the world, the end of well, yeah, I've been hearing about the end of the world all my life, growing up in a very fundamentalist, like Christian background, and then I started hearing people talking about climate change, all that kind of stuff, or global warming, and then as I started getting into trading, I heard about the dollar failing, blah blah blah. I mean, after 2008, every time you read the news every week, it was like the next 2008, worse than 2008. You don't hear about that anymore because people have forgotten about it. But it's always something. There's always doom porn out there, fear porn, and because if it bleeds, it leads. People are going to be attracted to the idea that there's something to be afraid of. If someone in the tribe said, "Hey, there's a tiger in those bushes over there," all of our ancestors, they really paid attention to it because, well, we didn't want to get eaten. And so we're very keyed into people trying to warn us about impending danger. It's just what we do. But take all that to a side and realize that every single day it's some new thing to be afraid of. Meanwhile, we have big old giant green prints going on the screen and opportunities to be had. So it's a really delicate balance to be informed by taking in the news and not be completely affected by it.
Don't be right. Just make money.
That's a good way to put it. Yeah. A lot of people they're it's funny to sometimes read Wall Street Bets, and recently I kind of saw I kind of looked on there and there were a lot of posts from people that had bought puts on SPY or SPX, whatever, bought puts on the market, betting the market's going to go down because of the debt ceiling, because of Ukraine, because of all these reasons that made sense of why things are going to go horribly wrong. And they're asking Reddit, they're asking Wall Street Bets, why are my puts not making money? Well, a couple of reasons. Number one, market's going up. Number two, as market goes up, VIX, the volatility index, goes down. So not only are you losing on the value of your option from the delta, the price movement, but VIX, which I think I need to note in this live stream, broke the May lows. VIX is a measure of the implied volatility of options. What does VIX mean? Well, when VIX is low, you have basically a slowly, steadily trending bull market. And so,
And if everybody in Wall Street Bets knows, and they're for sure, this is the if it's the common knowledge, I everybody, all the smart money knows, the algos know. Like, why are you? Again, you're just not. Nobody's that smart. Just be dumb. It's actually a lot easier to trade when you just
yeah,
are dumb.
just trade on the numbers. That's one
Yeah,
of the
just
benefits
draw
of
the line.
technical analysis is it takes away all that guesswork. And because at the end of the day, if people base their decisions on their opinions of what the macro is going to do, how's it any different than basing it on a level? Except the difference is if you base it on a level, if you base it on numbers, you know when you're going to get out. And let's say you have $100 and you bet it all on something and you say, well, I'm going to give it $5 to go against me. Well, you get out, you're left with 95. A lot of people will sit in there, let it go to 80, 70, 50 against them. And then at the end of the day, whether they're right or wrong, they got a lot less money to invest in something else when it does become a bull market. So,
And this is especially true with options. Like they're absolutely meant to make you fail. You're not meant to win. Someone's writing that in the anticipation of you losing money.
yeah, I mean, there's two sides to an option trade, and if you look at the Tasty Trade folks, all they do is sell premium, and to be fair, they have a higher probability of success. Now, when they lose, they take a big hit, but they're playing the casino game, just like the casino. They're taking the little small wins. Every once in a while, they take the big win, and then the people that go on Wall Street Bets, They make a big post about the big wins. Same reason the lottery puts people on TV, to make people think it's possible. But the reality is selection bias. So very low probability you're going to get that big win. Especially
Dollar General, though, the original question, it looks a lot like Target kind of did, but it got there a whole lot faster. And then if you go back to the weekly on 2020, it came back to the breakout area from 2020 and is now checked in, right, where it broke out in 2020 there.
Yeah.
On the way back up, and it stopped. But I would say that you know where the low is, but it's that one looks a little early to me. There's no other point of reference where it is besides that breakout area, which is what Target setup looked like, but this is early. So.
Yep. All right, we're coming up to the end. What that?
That could easily gap down another $2 or $3, $5 on Monday. But that's one to watch for sure. I don't dislike watching that spot for another couple pushes down myself.
We'll watch it next week. All right, we're coming up to the end. If you got any more things to look at, post them really quickly. The last things to look at, let's just reiterate. I'm going to be we're breaking away from the level on the ES. I'd like to see a pullback on here, but stock market bullish. VIX broke new lows, which makes sense as the stock market's going higher. TLT is not stopping me out, but it's just hanging out there. Gold, I'm still short gold, and this may take a while, but so far it hasn't come back to my entry. I'm cool with that. I'm cool with this.
Gold. Look what they did to our boy today on gold, huh?
Do what?
I thought I was going to get stopped out of that yesterday, and they wrecked it today.
Yeah. Well, I think it's I think the wrecking is happening for people that were jumping into it here at the high, the triple top, essentially. So yeah, the reckoning is going on. Silver, I'm more into gold right now. Bitcoin, 25K, still looking for it to get there, but if it does, it's probably going to do a full trend change. Not good for that. Ethereum, same thing, is trying to get itself on the bearish side of the cloud, maybe trending bearish again. Monero, rip. I'm not happy about that, but oh well. At least nobody knows how much I have in it. Amazon, play of the year, play of the decade. Activision Blizzard, the merger arbitrage, it's coming back up. Is it going to save my options? No, but I'm going to hold the shares that I have in that. Caterpillar, we talked about that. What else do we not talk about? Truist, regional banks, the most maligned sector this year. That is the sector you need to be looking at. Tesla.
Oh yeah, KRE is doing the business.
What is KRE doing? That's the regional bank ETF. Yeah,
it went long options there at 36.5.
Mm-hmm.
Everybody thought this was for sure the end. That's what I'm looking for. I'm looking for the MSNBC post about how Target's going to dump 10 more %, and that's what I'm looking at the ticker to buy. This is the same thing with the banks.
Yep. Waste management. I just have this. I've had this for about 20 years now. I'm not going to get rid of it. All right.
Snow. One more for you. Snow. We had a good one on the snow.
Oh
yeah.
Do I go look at something else too? Palantir?
No, you don't look at it. It's the end. No.
I'll look at. What about snow? What about it? Oh, big earnings dip and that recovered.
Big earnings dip and the rip 148.
Yeah. Palantir.
Got the gap still on hold.
What is this? Oh, I mean, look, I know somebody's happy with this. I just hope that he doesn't sell any of it. Huh?
He got a lot of options out of that.
Okay.
And he's got commons, I think.
He better have shares. He's in. Okay. All right. Well, he's a grown man. He doesn't like my advice anyway. Okay. Thanks everybody. I hope you have a good weekend. User friendly. Why is the stock market ripping with all the FUD? Assuming stock market equals Q. AI FOMO, people buying the narrative and running away from almost every other sector. All right. Have a good weekend, everybody. We'll be back next week. Yeah, I'll be here for a few more weeks before I leave on another vacation. So trade wisely. See you next time.